Good morning, everyone. Welcome to the Trading Market Technicals morning call video for Monday, March the 18th. Hope everybody enjoyed their St. Patrick's Day. Today is Monday, and we have a lot going on from over the weekend. Want to just run some numbers down? Dow down 25, S&P down 2.5, Nasdaq down 11, gold up 66, and the U.S. dollar down 42. Basically, we talked about the max pain, and actually kind of worked out pretty well for those of you who were selling calls and puts. We did get very little movement to the downside. Friday was a little bit of a down day, taking some profits, but nonetheless, really no movement. We had pretty much up across the board. Here's the weekly gains and losses. If you look at the board here, we're up nominal, very, very small. Down here, which interesting, is semiconductors for the week down. Transport's up huge, 2.1%. Home bill is up slightly. And then you look down below, down here, you have your copper down very, very little. And then, of course, some of our gasoline, heating oil down. And gold was up on the week. Nothing really crazy, but it's going to be interesting to see what happens this week. On Friday, after the close, we had some news out on the Cyprus bailout that they're going to be receiving 10 billion euros from Troika. But what happened was they had some harsh conditions, which included a major haircut on current bank deposits. And that called for a 6.75% haircut on smaller deposits with a 9.9% tax on any accounts over 100,000 euros. Now, that is a big hurting for the small guy, and they already had a run on the banks on Saturday, so a lot of the ATMs on Cyprus was already running out of cash. So that's going to be a real big negative, at least for risk on. Now, I think if it was several months ago, I think maybe we'd have a small little down day, and that's about it. And then markets will recoup. We were down at one point 20 handles in the S&P overnight, in the overnight session, and gold was up 20. And now a lot of the risk-on pairs actually pared back a lot of their losses from early on yesterday afternoon when the markets opened. However, we're still down pretty substantially here, and we're going to open with a big gap down. So it's going to be interesting to see if the buyers of dips come in and buy this market. And I feel that we're probably going to get a bounce and probably get sold into for maybe a couple of days. Now, I don't know if this is going to be the start of the risk-off pullback that we're looking for, but I wouldn't be surprised if we see at least a 2% correction. Now, 2% correction in this type of environment really isn't that much. I would be looking for a little bit more of a deeper pullback, but that needs to be monitored on how this pullback is faring, meaning with volume. And we're going to really keep a close eye on this for today and tomorrow. However, it's refreshing to see a little bit of risk off come off because we're continue to grind higher at these levels. And this is what I'm always preaching about, how you can come into the market and S&P be down, the E-minis be down about 20 handles. Now, we were down at. We're down about 13, 14 right now while I'm recording this. So we'll see what happens as the day progresses. But it looks like that if risk is on, there's going to be a plenty of stuff to be trading during the day, and even probably take some some short positions, swing trade shorts. Now, another thing, real quick, before I get into the charts, and I do have a lot of charts here, is I want to talk real quickly about the currency. Now, I'm trying to put together some other ideas other than, of course, the euro. But if you look elsewhere and you think, and I'm looking at the Swiss franc here. Now, a few weeks back, we did warn about the further risks of deterioration, and S&P is pegged to the euro. The SNB is pegged to the euro at 120. We all know that. But if it's going to be interesting to see how they're going to battle this area here. Now, if the Swiss bank, National Bank, it was successful with their intervention last year and a half or so, it's going to be interesting to see how they hold this barrier. Now, I think that if the SNB, which is already overextended, and they're likely to see some support here at 120, but if the 120 fails and breaks, I think that could be a huge risk-off barrier, symbolic risk-off type sentiment, and that would really send shockwaves through the global markets. And I think so. I think that if that does happen, we could really see a real move in risk-off and these correlated commodity currencies such as the New Zealand dollar, the Aussie dollar and the Canadian dollar. So that's something interesting to see. I'm monitoring right now. Nothing really actionable, but it really is interesting to see what's going to happen. So keep an eye on this, on the Euro Swiss. That's going to be an interesting pair to be monitoring in the next couple of days and see what happens with Cyprus. But yeah, this Cyprus deal is not really good. Really hitting home to the small person who has money in there. So now, if you had money in a account, just to have money in the account, you're getting taxed some big a big tax in your fund. So think about it. If you had $100,000 in the account, you got a 9.9% tax on it just for having money in there. That's terrible. So anyway, enough of that. But that's interesting, and that's why the markets are down in the overnight session. So we'll see what happens if we do get some follow through. If the markets do recover. Now we are off the lows. So during the day, keep an eye on the overnight lows. That's going to be interesting if it holds. If it does not hold, then we got a full-fledged pull back here and a correction in the cards. So we'll and a tradable top, no less. Okay. So let's get into the charts now. There's a lot of stuff that I want to show you. All right. So here's our performance board. I want to show you the indices just to give you an idea. Dollar lower, and we had oil up big across the board, and then we have the Dow Jones, Nasdaq, S&P up nice, and mid caps. And here's really what you want to see right here: mid caps and the Russell. These guys right here are the leader. Right up in here, and then of course the transports, which I don't show you, but these guys right here, mid caps, Russell, transports, these are the leaders that you want to see leading the market higher. Okay, now I want to take a quick look at our econ data just to show you what we have. Wednesday is a big important day here, and Wednesday is going to be FOMC is going to be speaking, so that's where I really want to keep an eye on Wednesday's sentiment. That's going to be really important. Okay, now let's take a look at some of the indicators here. We had our NIMO really didn't do much here. Let me take a look here. Just move this up a little bit. Our trusty McClellan oscillator just kind of sitting around, really doing not much of anything. But if you look at what we're doing now, we have plenty of room to run to the downside and or to the upside. So we're sitting in neutral territory for literally all of February and all of March. We were a little bit overbought into January, but now we're just sitting around here. So this indicator really hasn't done much here. But what I want to show you is the stocks above the 50-day moving average. We hit a target of 89 up in this area, and now the S&P has managed to get up and continue to rise, making new highs where the stocks that are above the 50 days moving average have not. So stocks have not been making new highs above the 50-day moving average. They've actually ticked lower. So we do have some divergence in this indicator. So really keep an eye on this. This is actually going to be a good indicator to see what's going to happen here. Now here's the weekly chart of the New York Nasdaq summation index. Now the summation index is trying to go on a buy signal, as you can see here. Now, we had a sell signal 3 weeks ago. So now we're trying to get on a buy signal. We'll see what happens, how this week follows through. This could literally turn back lower and continue its sell signal. Now, we are not on a sell signal as of yet. We need to cross this red line here. So we'll keep an eye on this. Be interesting to see what happens towards the end of the week. Okay, New York Stock Exchange summation index, same thing. Trying to go on a buy signal here, guys. You can look at that. Now this thing needs to really start to curl back up again, but we're just about on it. So we are still way overboard, as you can see in these areas, and our CCI and our RSI 5 up top. So we'll see. But right now we're still looking at a buy signal on this. But with today's action, we might have a reversal. So I'm really excited to see how this market's going to open in the next few hours. All right, now let's take a look at the dollar. The dollar has pulled back, and like I said, the dollar probably is due for a pullback. We are up on the dollar today, and that safe haven flow is coming in from the dollar, as well as gold. Gold was up $20 at one point, and now was down 3, and now managed to rally back up to about 10. I'm sorry, I think gold was up 10, and now is back up to its highs from the opening yesterday, Sunday night at 6 o'clock. Okay, now speaking of gold, let's take a look at gold itself. Hanging right nicely above this area here, and we need to see this and hold. Otherwise, we get a quick flush to the 1525. Now, I like to see this ratio chart really start to break out. That's going to really give us a buy signal here. And here's the RSI, as you can see. We have back up in this area, and now slightly breaking out of this little sort of inverted head and shoulders, if you will, if you could take a look at that. But stochastic's not overbought, so we've got some good room to run here if we could get that, if we can get a nice movement in it. Here's the gold weekly chart. consolidating in his large triangle. So nothing wrong with this chart at all if you really take a look at it. However, if we do break this lower trend line of 1525, you're going to look at a 1421 flush. Easy. That is a long way to go, and I don't think that's going to happen right now. So if we do get a little bit of sentiment of risk off, I think gold will probably pop on that news, which that's what's been doing lately. Now here's copper. Copper lower again on Friday, just can't get out of its way above the below the 200-day moving average. Here's the daily chart of copper. The weekly chart of copper I want to show you real quick, and as you can see here, just literally sitting on the lower trend line here. If it breaks this lower trend line on a weekly chart, and here it is over here just to kind of bring it in, you're going to see that 13.24, and then of course that $3 number, and that's not going to be good for risk on. So we want to see copper, really, if you're a bull, you want to see copper start breaking back out of this symmetrical triangle. But right now, we're very, very weak. Take a look at the Huey. The Huey, the Gold Bug Index, held that weekly 61.8% retracement. Nice big reversal candle, if you can see for the week here. Kind of blurry, but right up in here we just have a nice big reversal candle. So this is actually a very good sign, and this is a logical place for a pullback on that Fibonacci retracement, 61.8% retracement. So gold, even for a trade, may be looking better for a long trade. Now, I want to see gold chop around for a couple days. We had really no movement in gold last week. We had an up day, down day, but really didn't do much. This week, I'd like to see some follow-through taking out last week's high. If gold can do that, then I think that we have a trade in our hands here. And this is what I'm talking about at a GDX. We need to really take out this $38. $38.20 actually would be really, really good. If we could take out $38.20, and here we have that right shoulder now. So we need to stay above this $36.50. But if we stay above it and take out $38.20, this inverted head and shoulders will come into play. And then we could probably break out maybe another little small pullback, making a higher low from this low here, and then really shoot out of this bigger bullish falling wedge pattern. Okay, so keep an eye on the GDX. The gold starting to look better, much better. All right, now let's get into in the index charts. We are literally $1 away from our all-time high from here and here, and this all-time high comes in at on the spiders at 159.09, and we are 155.83. So we're literally $2 away, which we could easily have gotten. Now with the Cyprus situation going on, let's see what happens. Who knows? Maybe we get that pullback that we're looking for. And that's what I kept stressing for weeks and weeks on end. Be careful when the market's up these elevated. You need one risk-off catalyst, and everybody starts running for the door. Now, we were down 20, right, in the minis. Now we've recouped about 8 handles, which is good that we've recouped it. Now maybe that doesn't happen. Maybe markets open down, it continues to rally, and we open down only 6 or 7 or 8, and then rally the rest of the day. That could likely happen. I mean, it is really bad news, but it depends on how market participants are going to react to the news. That's really what counts here. Okay, take a look at the weekly chart of spiders. Really, really nice here. We broke out of this bearish rising wedge. Now we broke out as a sideways resistance, which is now support. We held that to the penny, and now we're just breaking back above. We did get an outside week, okay, from the previous week, but really not enough movement here. And we are highly elevated and highly overbought here. Stochastics at 94, RSI way overbought, and then of course our MACD reading overbought here. So again, monthly and weekly charts reading overboard. That's not really a good sign. Usually when you get RSI above 70 on a weekly chart, you usually get some sort of a pullback, and maybe this could be it. Spiders daily here, consolidating back into this line. We did break out on Thursday, and then we're back in here. So sideways consolidation channels here are bullish. Okay, we have volume, low volume on this advance, which is kind of bearish. But when you're consolidating and you have this low volume setting here, that is actually bullish. So we want to really see what happens. And we either break out again, or we're going to break back down below the channel. And if we do break back down below our channel support, here are some numbers that I'm watching here. Right up in here, 155.30, and then 153.65, 52.88, and 151.50. And then, of course, we have a little bit lower down here. We'll see how we open and where we open with our support areas here. So tomorrow, it'll be interesting to see if we get either a bounce or we get a continued sell-off. And this is what our day traders are really working with here. Nothing. Absolutely nothing. This is going on, and if you go back, we get a sideways consolidation, one pop, and then consolidation again. And you go back here, we had 2 days of movement of risk off, and then look right, literally right back on again. And look what happened. Sideways consolidation. This is what's been happening from the beginning of the year. This is absolutely insane. I have never seen volatility this low and price movement non-existent in 24 years doing this. Okay, S&P Weekly, just want to show you the same thing as the spiders here. Broke out of this rising channel. We broke out of this resistance, which is now support, and we'll continue to move higher here. So this is going to be interesting this week, especially for the cash. 1575, 1576 going to be the all-time high. 115.55 is what we're looking at here. So we'll see if this actually has legs. If the market can rally and buyers or dips come back in, then I think that you really have something a little bigger here as far as strength's concerned. Although there's no volume, it'd be interesting to see how this market either buyers or dips come in and push this market higher, recoups all of the losses, and then we continue on move higher, or we get that correction. And that's going to be interesting to see what happens today. Transports for the day on Friday had a little bit of a sell-off, came back in and closed really virtually unchanged. A little bit of a sell-off here, but nothing really big. We're still overbought, highly elevated. Broke out of this channel here. Our leader is leading all of our other indices. And Russell, another one of our leader, we broke out of this sideways consolidation, and we closed literally at the highs on Thursday's highs. Diamond, same thing, breaking away. Now, Diamond, the Dow Jones is a follower, but it did consolidate, break back. Look at this move higher. When you see these little candlesticks and move higher on low volume, you have to be cautious. Once you get that risk-off catalyst, that market will definitely get hit hard here because everybody's going to be running for the door. Now, we'll see if this happens today with the Cyprus news. And then, of course, Apple on the weekly chart did well, actually looking a little bit better. We held that 420. We broke back above it. Nice big outside week reversal from the previous week. And 420 really is a key area now, as you can see. And we just want to show you the daily chart. A lot going on here, but we do have a big, larger downward channel. We have a little bit of a bullish fallen wedge, if you could see that in red here. And this little bottom triangle, and we broke back out of it. Now we're hitting this resistance area here. We broke out of it, actually. We closed higher. Apple's down about $4 right now. Really not much at all, considering the news out in Europe. But looking to see what Apple does here. This could be setting up for a little bit of a longer-term swing trade. Not for a long position. For a longer-term position, I think Apple does go lower. Apple really needs to prove itself that it's going to break out higher here. I think for a trade, you're probably looking at a long trade, but I wouldn't be buying it right here. Let's see where it dips to, maybe back down to this area here. So I'd rather be buying it down closer to the low 425s area for a trade. Okay, and lastly is the Qs, guys. Qs weekly chart. We are really not doing much of anything. We're consolidating here. Still inside this big bearish rising wedge channel, and it's only bearish when it breaks below. Remember that, below the trend line. So right now we're just sitting sideways and consolidating, which is actually bullish. Take a look at the daily chart. Same thing here. Sideways for 2 months, broke out of it, and now we're sitting most of March in another sideways consolidation, and that looks bullish to me. Okay, now Apple's holding it down for now, but I think the technology sector is looking for a breakout sometime soon. But I'd like to see a pullback, consolidate, move higher, maybe another pullback, sort of like a stair step, move higher. That's what I'd like to see, and we're not getting that, and that's what concerns me. So, guys, be alert today. We could be really have some good news as far as volatility is concerned here. We might have a good volatility play coming up in the coming days. All right, guys, a little bit long. I apologize for the long, but I wanted to get my point across for the week. Have a great week today. Have a great week. Have a great day, and please keep your stops in. Volatility will pick up, so that means that we should be busier trading. Have a great day. We'll talk to you tomorrow.